My experience with Alpha so far has been nothing short of exemplary.
The word that would best describe them, I think, would be trustworthy.
They're just a fantastic group of people.
We have a fantastic team in Alpha Wealth. We're all fully qualified individuals with over 60 years of combined experience between us.
I've spoken to so many different people that they feel like they've just like an extra cousin I've never met before, and they're always there with a kind of a helping hand to do whatever I need.
They have a very professional approach, and you feel like you're getting advice that you can trust and rely on.
They're a company that I would definitely recommend to friends and family. Nick and the team are there at the end of a phone or at the end of an email, and they will always come back to you.
Alpha Wealth provide a full range service to our clients' needs, just to make sure that you're doing the right things for you and getting the most from your own money, getting it working harder for you and ensuring that your family are protected. Thank you very much for joining us for this webinar on the UK state pension. My name is Nick Charalambous, and I run a financial services company called Alpha Wealth, and I'm joined by a fellow director. Her name is Clean O'Donoghue, who's going to be looking after the questions that come in during the session. And I would encourage you, please feel free to ask any questions during the course of this, and we will address them towards the end. Just in terms of the webinar today, and just before I get into this, I'm going to spend about 25 minutes or so just going through some areas specifically around the UK state pension, and then I'm just going to open it up to general kind of financial planning and retirement, which is really what this is about. For those of you not familiar with Alpha Wealth, we're a financial services company. We have offices in Cork and Dublin. There's 11 staff who are qualified, giving financial advice to individuals like yourselves. I myself am from the UK originally. I've just successfully applied for the UK state pension buyback years. I feel like I'm quite expert in being able to help you understand what the opportunity is, how to apply, and as I mentioned, just in terms of financial independence. I'm just going to play a very short video, and also my colleague Cleaner has just put into the chat. We would encourage you to ask questions, and please feel free to populate them on the Q&A.
Warn that they are running out of time to benefit from what has been described as an insanely generous concession to top up their pension from that country. More than 250,000 Irish people may be due to benefit from the pension top-up. Thousands of Irish people worked in Britain and paid national insurance there, giving them access to a pension. Under transitional arrangements introduced after major changes to the British state pension system in 2016, people can now buy back as many as 18 extra historical years' worth of national insurance contributions. The deadline for applying and paying to avail of the scheme is April the 5th next. But UK authorities are so overwhelmed it is taking months to process applications. This means there's an urgency about making an application to buy back years to boost a pension from the British Exchequer.
So you can see, obviously, it has gained a lot of press. I had an article published in the Sunday Times there earlier in the month, specifically detailing why it's such an opportunity. I'm going to spell it out for you there in the next 5 to 10 minutes. Specifically, as was mentioned on the video, what the UK government are allowing individuals who have worked in the UK for 3 years, and if there's any ambiguity, my advice always is to just check. I've had individuals who have only worked there for 2 years that were being given consideration for 3 national insurance years. I myself worked in the UK in the late 90s, just for a period of about 3.5 years, and yet I was actually qualified for 6 national insurance years. So it's not an exact science. You can go back, and depending on when you left the UK, I would have worked there in the late 90s, as I mentioned. So I have been basically gone for the full 18 years, as mentioned. But let's say you left the UK in 2010, that gives you up to 14, 15 years to buy. If you left in 2015, obviously you've got about 9 or 10 years. And the reason why there's this urgency is that on the 5th of April, 2025, the UK government are only going to allow people to buy the last 6 years. So going back to 2019. So obviously it's really urgent. Now, if let's say you left the UK in 2020 and think that this video doesn't really benefit you, it does. I would always encourage people to take advantage of an opportunity, because those 6 years could be reduced further as well. And because of the massive amount of people all over the world who have worked in the UK that are applying for this and costing the UK exchequer billions and billions of pounds, the fear is that they may make adjustments. So the UK full state pension currently pays £221.20 if you have full qualifying years, which is 35. Unlike the Irish state pension that you can equally apply for and will qualify for if you have 10 PSI contributing years. So it's not going to in any way affect that, or any private pensions for that matter. The difference in the UK is that if you get the minimum 10 years, so anyone who's worked there for say 3 years, I'd absolutely encourage you to get the further 7 in order to get roughly a third, which is 10 over 35 of UK state pension provisions. And again, please feel free to
So
put any
Nick,
questions.
on that, we've just had the first question in, and we may as well address it here. It's just, I worked in the UK for approximately 14 years. I looked at trying to increase my number of years a few years ago, and I could have at the time, but never got around to it. Apparently, I am entitled to 21 years of state pension as it stands. Can I now build up to the full 35 years of pension, or should I have done it sooner?
Depending on your age, and obviously I don't know how old you are, but presuming that you buy the missing years that you could have done, and it's never too late. Well, obviously, if you're going to do this, no later than February 2025. So anyone who's listened to this on pre-recorded, if you're listening to this in March or April, it is going to be too late. But you still have an opportunity now where you buy the past years and you continue to buy years up to your 67th birthday, or until you get up to your 35 full years, or as many as you can afford. There is a financial cost, which I'm going to go through briefly, but it is far outweighed by the benefit. That's why they refer to this insanely generous provision. But I would definitely encourage you to take advantage of this opportunity, and I'll explain how to do that now and continue to buy years going forward, which is exactly what I'm doing. So just to give you a few basic facts, the UK state pension kicks in at 67 years of age. It's 66 in Ireland. I mentioned the full payment of £221.20. One of the things that you should understand is that unlike the Irish state pension, the UK state pension is increased every year by the lower of one of 3 things. It's called triple lock because there's 3 factors, which is either the rate of inflation at the moment, roughly about 2-3%, the average rate of earnings increase, or wage rises. And the wage rise last year in the UK was 8.5%. So that's how much the UK state pension went up by. What an incredibly generous annual increase that is going to apply to the UK state pension. So that £221.20 is going to increase rapidly over the next number of years. It's an insanely generous opportunity, as stated. So let me explain. The key thing is to know that there are 2 classes of national insurance contributions in the UK. Class 2, which is the cheaper form. They're exactly the same, by the way. It's just which you are actually classifying under. That's cost you to buy every year. In that example of question that was given, those 14, 15 years, £165 per year, the equivalent of about €200 in today's exchange. There is class 3 contributions, which is buying exactly the same year, but it will cost £860. Now, you might be wondering, why would anyone ever opt for class 3? Of course, it's cheaper to buy class 2. Unfortunately, it's not a case of choosing. It is up to HMRC to put you into a category. And generally, the difference is, if you can show them on the application form, which is only 3 pages and very straightforward to fill out, which I'm going to show you in a second, if you are able to display the fact that there hasn't been a large break between your working in the UK, which is your national insurance contributions, and you're working in Ireland, which is PRSI, you would typically be classified under class 2. However, you could automatically have been put under class 3. That is what the UK Revenue are doing, because unfortunately, a lot of people that have been filling in this application form have all been ticking the class 2 box because they've realized that it's a cheaper class, and therefore UK Revenue have taken offense to that and essentially defaulted everyone to 3. So now you have to prove it to them. Again, I'll explain a little bit more in a moment, and please feel free to populate any questions. So just to explain, for every year that you buy, whether it be a class 2, £165, or class 3, £865, you'll get an additional £329 at the current rate, which, not forgetting, increases drastically every year for each year you buy. That's the current £11,500 divided by 35. So if you had 30 years and you bought the 31st year, that would give you an extra £329 per year for that once-off cost of 165. That means if you were to live approximately to about 82, which is the normal age that we might expect to live until, that would give you, for that payment of 165 or £865, approximately €5,000. That is a return of investment at class 2, again, assuming that you live to 82 or thereabouts, of 3,000%. We talk about investments in Alpha Wealth. This is the best investment you could ever make on the basis that you would live to a normal age. If you live longer, better again. And even if you don't survive till 82, and I don't mean to be morbid, but it would still benefit you as long as you survive until at least 70. And in class 2 world, it'd actually only be 67 and a half. You get your money back after 6 months. At class 3, it takes 3 years, as stated there on the form.
So Nick, before you move on, I'm just going to get clarification on this question. I have 9 years of class 3 national insurance contributions up to, it says I am 60 years old. How many years should I realistically buy back?
As many as you can afford. So again, you need to see on your record, is there any missing gaps between now and 2006? That's the 18, 19 years that we're speaking of. So if you've got any missing years, absolutely, my advice would be, if you can get the £865 for each of those years, you need 10. So you definitely want to be buying at least one more year. And you can buy further years, obviously at 60 years of age, that gives you the opportunity potentially to buy 7 future years. And you will have a little bit of a lead in time, and you don't have to decide how many years you buy now. Fill in the CF83 form. There's one thing that I really want anyone listening to this call is, you have nothing to lose by filling in the CF83 form. When UK Revenue get back to you, and it could take several months, you can then decide how many years that you want to buy. When I received my letter from them, and as I mentioned to you, I successfully went from class 3 to class 2, I opted to buy the maximum years, but I could have bought just 4 in my case. I had 6 already. You can choose at that stage. So, and you might be able to save a little bit between now and then. This is about the financial planning piece, which I'm going to touch on a bit later on. Okay. Let me give you a specific case study, and this is me. So because I had so many years since I left the UK, and I appreciate it won't necessarily apply for everyone here, but I had the opportunity to buy 17 years. I did it last year, so it was only 17 at that time, where I paid £2,805. That was 17 by £165. I did it from my Bank of Ireland online banking, so nothing, out of the ordinary that I had to do. Obviously, I paid the euro equivalent, and I'm now comforted by the fact that I have 23 years, the 6 I had already, the 17 I've added, and I'm going to elect to buy every year £165, but I could decide not to at any stage. Even if I had been classified under class 3, whilst it would have been a larger financial outlay for me, yes, it would have cost about £14,700, and I would have begged, borrowed and stole to do this, by the way. I know that it's going to give me an extra income of about £5,593 for those 17 years. What a fantastic opportunity. Just to mention as well, and I want to be very transparent on this call, anyone who's wondering what happens if you don't live to 67, as it would happen in the Irish state pension or any state pension for that matter, there is no payment. But I suppose respectfully, if you're not going to be around to receive it, does it really matter? Okay, this is just a snapshot of actually my record on gov.uk. And I'm going to email everyone on this call. And again, if it applies to friends of yours, any family members, feel free to reach out to me again. I'll put my contact details for anyone that doesn't have them, but I think all of you would at this stage. And I'm happy to answer any questions, and I will help you with the process. I won't fill in the CF83 form for you. Unfortunately, that's something that you're going to have to do yourself. If you have questions on it, of course, please feel free to reach out to me. I've been through the form ad nauseum over the last 18 months or so, but it is relatively straightforward. The one thing I would say to you is when you're filling in the CF83 form, is make sure that you fill it in to the best of your ability with a view to try and get in classified under class 2. And if you're in any doubt, the number that's on the screen, and I'm going to email you later, I would pick up the phone to HMRC. I found them to be very helpful. I've rang them on several occasions, asking certain questions about why they haven't applied the years that I bought, and making sure that they've received the payment that I made. They confirmed to me that they had, but they also stated, which is no surprise, that there is a large backlog. But the one thing about the CF83 form, guys, is make sure when you fill it in, you're quite accurate with the dates. If you give random dates around when you left and you didn't know who you worked with when you left, they are most likely to put you into class 3. If you don't know, and if you genuinely, let's say, can't think of the date you left the UK or the employer you left, you're going to have to just complete the form to your best of your ability and accept that you're going to be classified under class 3, because that's typically what we've seen. But I would pick up the phone to HMRC. And if the one thing you do need when you're doing the form, guys, and when you go onto the gov.uk record, it's quite simple. I'll give you a step-by-step guide as to how to do this. You need your national insurance number. And if anyone doesn't know the national insurance number, whilst you can apply for it, it will take too long. My best advice to you is ring your old employer in the UK and ask them. They should provide it to you, obviously based on you giving them certain personal information.
So Nick, before you move on, do you want me to just pop in with another 2 questions that have come in?
Yeah, please do.
So we are a married couple. I worked for 5 years and my wife for 2. She was a homemaker for 3. Can we both buy back years?
You certainly should be able to. I can't say definitively whether the second person would, but what I would definitely say is you should absolutely apply. You should check the record. So what you're going to do is you're going to follow the email I send you tomorrow morning, and you're going to see how easy it is. The reason I'm going to send it tomorrow morning is I just want to include this video as a reminder to anyone, particularly if anyone missed any part of this, where you'll be able to see what your record looks like. So like mine, you can see on the screen here saying that my year is not full, my year is not full. If I scroll down further, you could see the full years that I have. And it's quite possible, I'd say, for someone that does have 2 years, potentially leading into 3, there's a good probability, but don't guess or don't just not apply. At worst, I'd say to you, fill in the CF83 form, send it off and see what comes back. I found them, as I said earlier, not to be exact in the way that they've generally, looked at the number of years that people do qualify for.
So sorry, I've another 2 questions. I have got state pension forecast from the revenue. I was contracted out to SERP for most part of my employment in the UK for 19 years. How is that to impact on the buyback?
You should still be able to buy back any years that you weren't in receipt of national insurance contributions. But again, without meaning to repeat myself, when you look at your gov.uk record, which is quite simple to navigate, you'll be able to see what you're qualified for, what years are missing. And if there's any further ambiguity, and I know I don't really want people to think that I'm passing the buck here, a quick phone call to the number that's on the screen. I would ring them first thing in the morning. Anytime I've rang them, their office is open at 8 a.m. Ring them at 8 a.m. I generally just do something in the background. I'm on hold for 10, 15 minutes, and then I ask the question, because they'll tell you specifically. I can circle around the answer, but I would certainly be saying to you, try and get as many years as you can, particularly for those years that have gone less than 2018, because those years will never be able to be got from April of this year onwards.
So just before you move on, sorry, that person just said that they have access to the Revenue Gateway and they know their national insurance number, but it seems that the Revenue have archived the records and couldn't see any history. And then somebody else has just said that they've tried contacting HMRC in relation to this, but had trouble getting anywhere with it as she worked in the UK under her maiden name. Is this a common problem, and what is the best route to resolving it with HMRC?
Okay, so there's a couple of different things going on there, but the first is you need to ring them, which I understand that you've tried to do so. I would try again. I found that sometimes you can come across people who are more helpful than others. The second thing is that if your record states that you have the 10 years, which is the key one, if you don't have 10 years, and if you're in fear of missing out on those pre-2018 years. But don't forget, guys, you can still buy, even from April the 5th onwards, the 6 years. So it's not that you're under a panic and it needs to be done today. I'm only saying to you, get into the queue, particularly if you are buying pre-2018 years. In this case, I would try one last time with HMRC. Again, the number that's on the screen. I would fill in the CF83 form and send it off. If you get an application, you must understand, guys, they are inundated. They don't have anywhere near enough staff to cope with the volume. And whilst I know it sounds a bit loose, the reality is my record went from class 2 to class 3 back to class 2 because I challenged it. You have to recognize the opportunity, as I mentioned earlier, and it's something that you have to go looking for. Now, the fact that one of the questions stated that their record was, I think, locked or archived, that would require a phone call, because obviously...
No, but then he said that they kept saying to him that he has to write in by letter and that he's just got so frustrated with it.
Okay, but write in the letter, and at least then we can take it further once the letter is received by them. But there's no point just giving up at that stage. I appreciate sometimes it can be difficult, but don't forget, guys, you know that 500% return for class 3 and that 3,000% return for class 2? This is your opportunity. If I said to you that there's 5,000 euros waiting for you, you'd write a letter and you'd make a few phone calls. This is the opportunity to do that. And I can assist you, as I mentioned to you, but there is certain things that you're going to need to do, and I can't, unfortunately, contact HMRC on your behalf.
I might let you progress, and then I'll address the rest of the questions when you've finished them.
So just moving on, and I'm more than happy to address, as I said to you, any queries that come. Obviously, the reason for charging the 99 euros was to give advice, but I will assist you. If you want to email me, ask me questions, I will liaise with you, mostly over email. The reality is that, again, like that, I'm inundated myself, but the key thing is just to try and help you navigate, and the point being is try and get those pre-2018 years. With regards to just general financial planning and retiring, the state pension in the UK, assuming that you get even half of the qualifying years, so say you get the 17, 18 years all told, that's worth about 125,000 euros roughly on average to someone that lives to 80 years of age. I can quantify that, but obviously simple math will tell you £11,500 a year from 67 up to 80 with indexation and conversion into euros. It's significant. It's north of that figure, but I've been very conservative. The Irish state pension, are you going to qualify for that? Many of us on the call should have our 10 qualifying years. The next thing is any private pensions. Do you have an old pension scheme from a previous employment? Do you have a UK non-state pension? Many of you that are on this call may have worked for a company where you had a pension scheme. Do you know anything about it? Do you know what funds it's invested in? You certainly shouldn't be looking to bring it into the UK, into Ireland, sorry. It's very expensive, it's very messy, but you need to make sure that they have your contact details. And I can give you some guidance around making the most out of that. You can access a UK pension from the age of 55. I have a UK pension scheme, a private one. Obviously, I have my state pension, I have my Irish pension, and I have my Irish state pension. So I have 4 sources of pensions, and I know that my non-state ones are being managed in the best funds possible, because it's really important. The slide here on the screen states, you know, that not all pension funds are the same. I worked for the Scottish Widows in the UK. I worked for Lloyds TSB Bank, who were actually affiliated to Scottish Widows. And I'm an expert in helping people manage their pension funds. In an Irish context, you can see on the screen there's 3 different pension companies, Mercer, Irish Life and Zurich, the exact same risk level, and you can see the returns are vastly different. And depending on your age, depending on your term to retirement, I can give you qualified advice about which funds are most appropriate for you if you're in a company scheme, what type of pension is best for you if you are in an old company pension that you've kind of forgotten about, or that you want some advice on. And those pensions typically are available from the age of 50 onwards. So you could potentially access some of that pension scheme to pay for those UK state pension years. Because people often say to me, Nick, I can't afford to buy these years that you keep going on about. And I'd say, have you explored avenues such as getting access to an old company pension?
So Nick, on that, a
Yeah.
question came in and I may as well ask it now. I have an old private UK pension worth circa 5,000 sterling. Would it be better to cash this in and use the funds to buy back state pension, or leave the few pounds it would give me down the line?
It's preferable not to access it, because pensions grow tax-free, and it would be a vehicle again to just assist you in your post-retirement years. But you can only access the pension from the age of 55. So depending on your age, it may or may not be possible. Okay, just to move on. General financial planning, again, I don't want to get off topic, but it's important. There's no point you going after this UK state pension and forgetting other things that you can save money on. For example, we talk to our clients and any people that we come across around what are they saving for, where is their money, and is it earning interest? In Ireland, we got particularly lazy because interest rates were so low for so long. We weren't getting any deposit returns from the banks. That changed about 2 years ago with the introduction of Revolut. The banks will give you about 3% for monthly savings. AIB, Bank of Ireland, have online savers doing that with access, but also for lump sums. These online banks, many of them are operating in Europe. I'm sure some of you have heard of Raisin Bank, Trade Republic, Bank, Revolut being the most common, but unfortunately the worst of those in terms of interest they pay. And we can assist you in making sure that your money's working harder for you. The slide on the screen there obviously is just a snippet from Raisin Bank. I use it, there's no fees, we have no bias, but it's actually fantastic. And you can opt between different banks, more secure than the Irish ones, by the way, that will pay you generous rates of interest. And then we talk about medium term. This is that period from kind of 3 years up to that age of retirement. And depending on your age, obviously that could vary. But we talk about making your money work harder and making sure that it's in the right type of account, growing interest for you. Now, I'm not going to get into the specifics today with you, but on the 13th of February, I'm running a free, no obligation webinar about the smart ways to invest your money, whether you're saving for a house, kids' education, early retirement, and helping you find the best accounts. I'm going to be talking about property investments, investment funds, cryptocurrency, exchange traded funds, deposits, all in the space of half an hour. And if anyone does want to log in for that, you can use a QR code on the screen, or indeed go onto our website, alphawealth.ie. And there's a lot of really good tools on our Alpha Wealth website, such as videos that I've done recently. I did one in earlier January on a Kickstart which brings together a lot of the areas that I've just touched on. Finally, just before we get into any further questions, and please do feel free to ask more questions this evening. If anyone is interested in booking a financial review with me, because you would have paid for this session this evening, we're offering a discount of 50% on a financial review. So it's €99, where I'm happy to give you advice around giving you guidance around an old pension you might have in the UK or in Ireland, getting the best out of your savings, making sure that you're on the lowest mortgage possible, helping you to get onto the property ladder if you wish. We don't provide mortgages in Alpha Wealth, but we give independent guidance. We can help you with financial budgeting. I can help you reduce any debt that you might have and find the funds to actually pay for the UK state pension and how you could stagger that out over the coming months. You may not have to pay for this UK state pension, by the way, for a period of between 6 and 9 months, and I'll get you in the best shape possible in order to do that.
So somebody just said there that they missed the start due to Zoom updates. I've actually contacted HMRC in August 2024 and paid the amount they told for 1 year's contribution in September 2024. I worked in the UK for 4 years, from June 93 to June 97. I now need to know, firstly, can I pay from when I left to now, i.e. 1997 to date? And if so, how much per year?
Okay, without going back over too much old ground, and we will be providing the video where you'll get a fuller explanation, but you can only go back to 2006 as long as you apply before April, but really by February because of the delay. And you can buy up to 18 years on that basis. So that's 2006 to present date. And the cost of those years will depend on whether you're being classified under Class 2, which is £165 approximately, or Class 3, £865. You probably know which of those classes you are. And again, if you listen back to the webinar, you'll hear me explain that you should try and be classified under Class 2, even if you've already been classified under Class 3. As long as you can try and prove to HMRC through the CF83 form that you would have completed that you haven't had much of a break between National Insurance and PRSI.
And Nick, can you explain how you challenged the HMRC to be reassessed from Class 3 to Class 2? How did you achieve this?
I rang them. I stated to them that because I was a little bit vague on the form the first time I completed it. Obviously, I left the UK back in 1999, and I didn't realise the significance of why they were so interested in the date that I left the UK, the company that I worked with. Now, I did have a break, and in fairness, I probably shouldn't have been classified under Class 2 because I had a break before I started employment in Ireland. But again, like that, they just put me down under Class 2, and I paid the contributions under Class 2. So it was a little bit of a around the back door way. I can't tell you the specifics of how I did it. Just the fact is that I did because I challenged it. And it just shows you how loose they can be inside, obviously, HMRC.
And what to do if you've lived in several places in the UK, like at different addresses? Do you just give your final address or put in an extra sheet with all of the addresses?
Generally, it's the last address. They have your records, so they're really trying to test you and see when it is that you left. So I'm not sure would I go as far as to fill in, another A4 sheet. I would fill in the CF83 form, providing my last address, but I would probably ring them. Guys, please don't be afraid to ring HMRC. Whatever you think they are, ring them early in the morning, 8 o'clock onwards, and just ask the questions. I'm here to give you advice to the best of my ability, but they are the office that will tell you specifically the best things that you should do, particularly at this stage. We are under a little bit of time pressure because of the backlogs. And what I'm saying is that, in my opinion, if it were me, I'd start filling in the form. I'd ring them while I'm filling in the form. And if they say, yes, state all of the dates, then yes, you're going to go that extra mile and complete those dates to the best of your ability.
So, sorry, the person that asked the question just earlier about being in the UK from June 93 to June 97 has said that they have, they are a class 2. They have a payment slip for 179.40, which they paid last year. Can they use this to pay for the other 17 years using this slip?
You can, but I would ensure that you tell HMRC. So again, like that, in your case, I would ring them. I would state to them that you're paying that, because don't pay the £179. The reason why I've used £165, guys, and it wasn't that I was being loose, they have recently increased the cost of the national insurance payment to that £179. So if you send them like 18 years worth of £179, you've totally overpaid. For most of the years I paid for, it was 160. That's why I've said circa. For some of the years it was 165, and yes, for last year it was 179. So my best advice to you is inform them, but absolutely make the payment. And the fact that you're class 2, better again.
Somebody said, sorry, I'm attending on behalf of my husband. He worked in the UK in the 90s. Does this apply to him or not?
He sounds like me. I worked there in the 90s. So yes, absolutely. As long as he's under, and I should have said this earlier, the age of 67. So you cannot be older than 67 and apply. Unfortunately, it's too late. And if anyone on this call is listening to this who is older 67, I'll happily refund you. I did try to make it clear that you need to be under the age of 67 in order to qualify for this.
Perfect. I'm just trying to think whether there is. No, I don't think there. Oh, sorry. One other question, just in terms of paying. So do you pay at your application or when they confirm your years and your class? So can you just confirm when you actually have to pay?
You don't pay anything in the application. This is what I'm saying to you. It is imperative that you should, in my opinion, fill in the CF83 form. And then once they get back to you, which can take a number of months, they are trying to fill in the backlog. They've been hiring, I believe, many people to help out. But you will then receive a letter detailing specifically each year and the cost of each year. You add up the numbers that you want to spend on, and then you send the payment. I did it in 2 tranches because I set them up as a new payee on my Bank of Ireland account. So I sent them the first €1,000, and then I had to send them obviously the balance 3 days later. And I rang them to say I've paid you in these 2 tranches, and they confirmed receipt of those, but they didn't apply that to my record yet. That's fine. I'm in the system and I'm looking at my record once a week roughly just to see when they've done that. I'm not overly concerned. I've proven to myself that I'm in the mix. And again, more like that, you've got until late March to confirm, obviously, ideally, that you're there, but you don't have to physically have paid the money before April. You just need to have got your application in.
That's it with all the questions?
Listen, I really appreciate, obviously, those questions that we received this evening. I am going to send, for those of you that may have missed it, a video of the recording today, the slide deck as well, in addition to the step-by-step guide of what I would suggest you do. But the key thing is, guys, you've got to be on the front foot. Ring HMRC if there's any doubt. Ring them early, as I mentioned. Don't give up on the first attempt, and do the best you can to try and get classified under Class 2. But even under Class 3, I think it is a fantastic opportunity. Again, thank you again for your attendance. And if anyone is interested in booking that financial consultation with me, as I mentioned to you, it is at €99. It's discounted by 50, and you can book in, either email me info@alphawealth.ie, use the QR code, or go onto our website. The discount code is AW half, HALF, to get the discount. And I mentioned earlier, there is a webinar that I'm running on the 13th of February. It's free for anyone that does want to register. You don't have to listen live. We will send you the recording afterwards. Thank you very much again. And for those of you listening live, enjoy the rest of the evening. If you were listening to this room recorded, you need to apply before middle of February, in my opinion. Otherwise, I think it might be too late. Thank you very much again, and take care.